back with another trade recap for today. Today is August 12th, it is a Tuesday, and guess what came out today? We had some red folder news at 8:30 a.m. CPI, Consumer Price Index news came out. This is obviously red folder news that impacts the US dollar, so there's going to be a pretty large impact on our Nasdaq charts for today. And going into the morning, I'm looking for data highs and data lows to be strong draws on liquidity. This is Forex Factory. If you come to the calendar on Forex Factory, it will show you all of the different news events for the week, for the month, whatever, and it will show you what currency is getting impacted by it, the level of impact, and you can also click on all of these to read the news and see what's going on. So again, this is the Consumer Price Index that came out at 8:30 a.m. and impacted the US dollar very heavily, which is why it's a red folder. But CPI, again, usually generates two strong draws on liquidity. So coming into the market open this morning, I was looking to see both of those get taken. Let's mark out the first data high. Turn my magnet on. This will be data highs because it's the high of the 8:30 a.m. candle. And again, CPI came out at 8:30. So this entire candle at 8:30 on the 1 minute time frame was directly influenced by the CPI news that came out. Again, at market open, which is right around here, this 9:30 a.m. candle, I'm looking to see the low from the data candle get taken out because we already took out the high. I'm looking for price to come back and take the low. And if you look closely on the 1 minute time frame, what do you see here? We see a classic ICT power of 3. We have an accumulation phase. We have a manipulation phase to the upside. And what comes after manipulation? Distribution in the opposite direction. So once again, accumulation, the market is consolidating, it's moving sideways, it's just generating buying power. It comes up for a strong shift upwards. And again, I looked at this as manipulation. And then we came all the way back down once again for the distribution phase of the power of 3. So once we come up and we make these highs with the manipulation, again, I'm already expecting data lows to get taken out because again, that is a high probability draw on liquidity. So once we come up after market open with this manipulation leg, like I said, I'm looking for confluences that will confirm the market is going to reverse and head in the opposite direction. So initially, I see a change in the state of delivery right over here because we displaced and closed below the last up close candle. So that is a change in the state of delivery. We also have displacement beneath this prior protected low. So we displaced a low and we had a change in the state of delivery, which is just for the candle bodies. This down close candle I perceived as a breaker block, a bearish breaker block. So again, with breaker blocks, because I get a lot of questions on what breaker blocks are, I perceive this to be a breaker block because it would be an order block if price was to go up, come back down, and continue upwards. This would be a bullish order block. However, because we went like this and closed below it and then tapped back into it and continued lower, this is going to be a bearish breaker block. So once we closed below it, I'm expecting price to retrace back into this breaker block zone, which it did, literally almost to the T. So my first entry, if I was on the charts, like I literally got back to the charts like right after we tapped into this breaker block zone. My first entry would have been ideally right here with probably a 30-point stop just above this fair value gap and look for a 1 to 2 to the downside, or maybe even just continue to target it and boom, get a 3.38. That's a beautiful trade. However, like I said, I wasn't on the charts at the time. I came back to my computer and we were actually right around here. It was around like 950. So I'm seeing more displacement. I'm also seeing a mitigation block. Ooh, I don't think I have a mitigation block thing. I'll just write it real quick. Mitigation block. So mitigation block is technically a breaker block that does not sweep liquidity. So because this generated the move upwards that swept liquidity, this is a breaker block. But since this move up did not sweep any liquidity or manipulate, this would technically be a mitigation block. So we had a mitigation block plus another fair value gap that also displaced. Oh, and I didn't draw the fair value gap from earlier. Sorry about that, guys. I'll draw that. So again, this ideally would have been the best entry up here, but I was able to catch it on the way down. So again, mitigation block plus the fair value gap that also, guess what, displaced here. We also closed below all of these lower points right here. We closed outside of this mitigation block. We didn't just wick outside of it, we closed outside of it. So I'm looking for price to retrace again back into this mitigation block zone and back into this fair value gap zone and print downwards. So I took shorts right around here at 710. Oops. 710.25. I had a 25-point stop right above this fair value gap zone, and I targeted 50 points to the downside right at data lows. Yeah, literally at these data lows. My stop was a couple, ticks above it though, just in case, but I ended up hitting this within like, actually I entered on this purple candle, literally. I hit this in 3 minutes, and I entered with 9 contracts, so let's go like this. I'll demonstrate for you guys. My sell stop loss was up here, so I risked 470. That's actually false. I risked 450. So I risked 450, and my take profit was over here. Would have been 900, but I ended up again doing it a couple ticks short. So I ended up hitting my take profit in 3 minutes, maybe 3.5, whatever, for $884 on each account. Amazing trade today, beautiful trade today. Again, it helps having strong draws and liquidity. And then what happened afterwards? After we took out that liquidity, after we took out the data lows, price continued upwards and pumped for 282 points. So imagine catching a reversal off of the data low sweep. Boom, you're catching 282 points. There's also another unicorn model that, I could have taken, but I had already made $800 for the day. I locked my account, I opt off. But as you guys can see right here, let me delete all the drawings. We have this fair value gap that displaces above our previous high. We also have this one becoming a breaker block once we close outside of it. And what happens? Breaker blocks usually always get retested, guys. I'm telling you. Breaker blocks usually always get retested. So if you had a limit order right here, stops at the bottom of that fair value gap, whatever, and you targeted again the highs, you could have targeted all-time highs, you would have made bank. Obviously that's a gamble because you want to ideally take static RRs, but let's do this. Let's just see, for example, how much money could have been made today. Stop loss down here, you could have risked $600, and if you caught the entire move, you could have made $3,532 just from trading 9 micros if you caught this entire move from the unicorn model that presented itself at 1018. There were 3 beautiful unicorn models today, beautiful price action, and that's what happens when you follow your rules. You make money trading. When you're patient, when you wait for your model, and when you execute on your model, you make money. The strategies work. You just have to work with it. You have to find it. You have to wait for it, and you have to execute on it. So, good trade today. I'll be back hopefully tomorrow with another good one, but we'll see. I'll take what the market gives me.